Thank you for joining me. I'm Alex, and I want to talk about LI Financial today, which is one of Graham Stephan's favorite banks. Not to invest in, just to put your money in, like an account, not like stock. Anyway, so what they do is banking, quite obviously. Current price is $32.62, which gives them a market cap of $12.2 billion. Dividend yield 2.3% with a payout ratio of 15.6%, which is amazing, which obviously brings us to a PE of 8. Revenue $6.4 billion, earnings $2 billion or 1.967. And a forward PE of under 7, which is amazing. And now I have to sort of warn you, because the revenue and earnings numbers are from the SEC filing, which did not match with the Yahoo Finance numbers, which didn't match with the Market Watch numbers, which didn't match with the MSNBC numbers, which didn't match with the CNN Money numbers. And so I have 6 different numbers for revenue. On earnings, they all match, so take that how you will, but the earnings numbers, I have literally 6 different earnings revenue numbers for this company, and it's been frustrating me for the past hour. So here we go. This number is right from the SEC filing. This number is also right from the SEC filing, so you would assume they're correct. Total assets $118 billion, total liabilities $166 billion, which give them a total stockholders' equity of $14.4 billion. And obviously, as is usual for banks, assets and liabilities match up more or less, with obviously, hopefully, slightly higher assets than liabilities. And so on the whole, I would say that for a dividend investor, this looks like an amazing stock, because the dividend yield is 2.3%, which is not nothing. It's obviously not as high as some others out there, and obviously you shouldn't really just be looking at the dividend yield, but the payout ratio of 15.6% is amazingly low, and you would think that they would be raising their dividend pretty much every year from here on out. Even possibly more than they need to. So I would expect the dividend yield to go up quite significantly over the next few years. Or rather, I would expect the dividend yield to go down while the stock goes up. Because obviously if the stock price doubles, the dividend yield halves. And I expect the stock price to go up because a PE of 8 is amazing, and the peers like Citibank, Bank of America, and all those have a PE of 10 to 12. So I would expect the stock to improve quite significantly from here. But obviously, we don't really care about that. We care about the dividend yield and the payout ratio and how the dividend is going to change in the future. And that's why I would buy the stock. I don't really care about the stock price because I don't intend on selling a stock, if that makes sense. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.